Both ETFs and mutual funds are viable choices for investors. But with so many investment choices available on the market, we believe it's important for investors to familiarize themselves with the basics of ETFs. What is an exchange-traded fund? An exchange-traded fund, or ETF, is an investment product representing a basket of securities that track an index such as the Standard & Poor's 500 index or the Russell 3000 index. ETFs were first introduced on the Toronto Exchange in the 1990s and debuted on the American markets in 1993. ETFs offer some distinct advantages compared to individual stocks and mutual funds. However, it's also good to consider the disadvantages when considering ETFs to make sure you're making the best investment decision. Why exchange-traded funds? The advantage and disadvantage of trading like a stock. The easiest way to highlight the advantage of the ETF trading similar to a stock is to compare it to the trading of a mutual fund. Mutual funds are priced once per day at the close of business. Everyone purchasing the fund that day gets the same price, regardless of the time of day their purchase was made. In contrast, you can purchase and sell ETFs at any point throughout the trading day and will receive the market price at the time when the order is placed, like a stock. On the other hand, ETFs might not be the most cost-effective if you are dollar cost averaging or making recurring purchases over time because of the commissions associated with the purchasing of ETFs. Also, if the ETF is a thinly traded issue, or if the market is experiencing high volatility, selling the ETF may be difficult. Low cost. As passive investments, ETFs generally have lower operating expenses and lower management fees, resulting in lower annual expense ratios than many other investment products. ETF operating costs are streamlined, which results in lower costs. This is due to customer service costs being passed on to the brokerage firms that hold the ETFs in client accounts. In addition, ETFs do not have mutual fund redemption fees. A drawback, however, is that ETFs traded frequently incur commissions and fees. Diversification. ETFs come in handy when investors want to create a diversified portfolio. There are hundreds of ETFs available, and they cover every major index, S&P, Russell, and sectors of the market, large caps, small caps, growth value. For example, there are international, regional, such as Europe, Pacific Rim, and emerging markets, country-specific, Japan, Australia, or the UK, specialized industry, technology, biotech, energy, and market niches, ETFs, like REITs and gold. Tax efficiency. ETFs are generally more tax efficient than index mutual funds. Index mutual funds themselves are tax efficient compared to actively managed mutual funds, but they still produce a capital gains distribution, which means that investors who hold them in taxable accounts, as opposed to retirement accounts, will get hit with tax bills. In contrast, index ETFs generally produce minimal or no capital gains distributions. In general, the broader and more liquid the index, the smaller the capital gains. Transparency. Actively managed mutual funds report their holdings on a quarterly or semi-annual basis, whereas ETFs disclose their portfolio holdings on a daily basis. Mutual fund holders may suffer from overlap. It's not uncommon to be holding several apparently different mutual funds that actually hold some of the same stocks, causing you to be overexposed to single companies. ETFs may be more transparent because, in essence, you own different market indexes. If you own a commodity-linked ETF versus large-cap ETF, you generally don't have overlap because of the specificity of the ETF vehicle. Additional information. ETFs, unlike mutual funds, are voluntary. This means you're able to buy and sell options on many of the ETFs that are available today. Investment decisions can be confusing. If you would like to learn more about incorporating ETFs into your investment portfolio, please call our office and schedule a consultation. We look forward to your visit.